Welcome, everybody, to Trading a Smaller Account. I'm Connie Hill, sitting in for Barb Armstrong here today. Happy to be here with you and happy to see so many familiar names out in the chat. Welcome to each and every one of you. Happy that you're here. If you're somebody that's new, that's just joining us for the first time, we welcome you as well. And feel free to participate as much as you would like to. We've got a very friendly community out here. Now, in this class where we talk about some different strategies that we can employ to grow a smaller account, one of the things we're looking for is momentum. We're looking to see that the stock might be going a particular way. Hopefully we're at the beginning of the move, and then we're trying to ride that move up as far as we can, or as far as we want to take it. So we're going to focus on that a little bit here today. Now, I hope you're following me on X. My handle is Connie Hill CS. We are joined by fellow coach, fellow redhead, fellow awesome veteran of the markets, Mr. James Boyd, in the chat. He's here to help me maybe fill some questions I can't quite get to, or maybe that are a little bit off topic. As you have those questions, go ahead and ask. I'm going to keep my eye on the chat. James will as well. If you're listening to this on the recording, like many of you do, when you have questions, put it in the chat or put it in the comments section in YouTube, because we go back, review those comments or questions that you have. We do that every day so you can get your questions answered as well, since James and I are not going to be sitting around just waiting for your questions in a live setting. All right, let's go through our disclosures, lay out the agenda for today. And we've got quite a bit of ground to cover. I think you're going to enjoy. Options carry a high level of risk and are not suitable for all investors. What we discuss is for information and educational purposes only. Do not consider it a recommendation. We'll be using technical analysis, but Schwab does not recommend the use of technical analysis as a sole means of investment research. We'll be using the Paper Money software application. It's what you download to your computer. It's the most robust version of Thinkorswim. It's a great educational tool. As you're learning strategies or creating maybe some different rules that you want to test out, see how they work, Paper Money is a fantastic place to do that. Past performance is no guarantee of future results. We're going to take a quick peek at the markets. We're going to always be looking at a lot of examples here. We have a couple that we're going to follow up on. A couple of trades we did last Monday, and then some additional trades. And then we're going to spend the majority of our time identifying new opportunities using a variety of different strategies, but also looking to say, hey, does the momentum look like it's running a certain direction or not? So we'll do that. Now, in this class, we have a $20,000 Paper Money account. That's the starting balance of the account. The maximum position size in any trade that we might do would be $5,000. And that probably will not happen a whole lot. Okay, and that would be for a stock position. The max risk in any trade we want to take is $400 to $500. We're not going to exceed that, not even by a buck. Okay, we don't want to do that. That's going to allow us to focus on either short-term opportunities or sometimes a little bit more intermediate time frame opportunities. And we're going to trade both bullish and bearish directions. So on the bullish side, these are the typical strategies that we'll cover. We're going to do maybe 2 or 3 of those here today. And if we go bearish, which we're probably not going to do anything bearish today, but typically we'll look at long puts, long put verticals, and short call verticals. And from time to time, as the market's a little bit more neutral, or maybe a particular stock is neutral, we'll consider doing an iron condor or calendars on those particular stocks. So let's head over to Thinkorswim. And today, it looks like the markets are still up a little bit. S&P is up 0.57%. You know, we put in that high a couple days ago, another new all-time high. Had just kind of a tiny pullback, but it didn't amount to much. You know, if somebody were looking at this, they might go, hey, I'm going to draw a flag, pull, and then maybe we have a 2-day pullback, and looks like maybe it's breaking out of that flag formation today. So what might we expect? We might expect the same run that we had here in this initial flag pull. That's what we would expect maybe the index's next move to go to. I'm going to take that and duplicate the drawing, bring it on over. And you can either put it kind of at the end of your flag consolidation area, or you can put it at the breakout. The breakout area is going to be more aggressive of a target, but you certainly could do that. And so this would say, just kind of measuring stick wise, maybe would get up to 8146-ish on the index itself. I don't know how long that would take, or even if it actually would happen, but just from a technical perspective, that's what we might expect for it to do. And how's the NASDAQ doing? Our NASDAQ looking quite similar, except that it didn't put in an all-time high. It's recently, its all-time high was back in June, but we're seeing kind of a similar pattern, a nice little run up here, just a slight 2-day pullback, and then maybe breaking out of a flag here as well. Russell 2000, you're like, man, that kind of looks like another flag breakout or a hold. A close above the high of the low day is a very common entry signal that some people like to see. And so we're kind of noting that throughout the market and in these indices, that's the pattern that we're seeing. And that is interesting because then we might see a lot of stocks doing something very similar, where they're maybe just breaking out or bouncing off of a short-term pullback. Now, on Monday, we did a couple of trades that we're going to follow up on here. If we come over here to the monitor tab, a couple just really took off for us pretty nicely. First one we're going to look at is Capital One Financial. And I put a marker here on the day that we got in. We got in on this nice little, it was breaking above resistance. We didn't know if it would do it on good volume or not because it was early in the day when we looked. And it turned out to be a little bit below average, but it looks like it's following through pretty nicely. In fact, it took us out of the trade 2 days later. We had put in, and I think on Monday we were going with 50%. I said, what kind of percent do you feel like we want to capture the profit and move on? And a big response was doing 50%. So on some of these, I think that's exactly what we did. So we in here, out there, as far as money, come over here to the account statement here. We paid $235 as a net debit. We said, get us out at, I think it was at 350. No, I guess it was at 360, and that's exactly where it got us out of the trade. All right, so 2-day trade in and out. A little bit of money to be made there. What would that be? Maybe a buck 25 times a couple of contracts. So $500 in a couple of days. Not too shabby, right? That can help grow a smaller account. Next up, another one that just, we just are happy about is Blackstone. Except it was even faster on Blackstone. We were seeing this nice little bounce out of the pullback. Looked like it was bouncing really nicely off the 10 exponential moving average. And it went ahead and hit that profit target the very next day. Okay, we love these short trades like this. At least I do. Maybe you don't, but I think you could learn to love trades like this. We go see, well, what do the money look like? On this one, we did a short put vertical. We brought in a credit of 52 cents. We said we'd be happy if we could get half of that or 50% of that. And it did the next day. So that's why it took us out to 26 cents. So we brought in that credit, saw the put spread drop. Perfect. That's what we love to see. And then we're just out of the trade. Now, in this credit spread, it's not like a huge profit per se, because we had more to risk than what we had to gain. But if we have our 26 cents here, so 26 bucks times 3, so we're looking about $78, something like that. But in a couple of days, that can be just kind of helpful, right? These small little base hits, as we like to call it. Let's add, Journal of the Unknown Prophet said it got us out of the trade, are setting exits and leaving it. Good till executed, so you're getting the entry and exit amounts on the trade or of the trade. So what we were doing here is we said if we get 50% of our credit, we want to be out. And so, yeah, that's exactly what we did. When we got into the trade here on Monday, we set up an exit here if we got filled on it. We did not set up a stop on either of those trades. Okay. And so, yeah, we went ahead, put it in at the same time that we put our order in. And so it'll sit there until it's executed or we change it. So that's, yeah, exactly what happened. Andy said COF must have been a paper money fill. Well, it was a paper money trade. So yeah, that would be true. Let's see what time of day it executed for us. Looks like maybe I'm in the Mountain Time Zone, so I have mine set to that time zone. The market opens here at 7:30, not 9:30 like on the East Coast. So the market was open for maybe about an hour when this trade kicked in, which was a couple days after we put it in. Okay, so to say it was a paper money fill, I would say is accurate because we're doing all of this in paper money. Okay, maybe you meant something else beside that, like maybe paper money filled you and a live account wouldn't. I don't know that that's necessarily the case if that's kind of what you're commenting on, because it just kind of performed nicely for us. And if it was earlier in the day, it could have been that it was up a little higher on this candle this day, maybe when it kicked in and then later it pulled back. Could be the case. All right. Next up. Let's look at another one that we did here. We did Verizon. And let's just maybe start with the chart here. On Verizon, I went ahead and wrote in what the trade was here. We did a 45.46 short put vertical with the expiration of August 21. And on this, our short leg here is 46. So I think we did a short put vertical here. Let's come over here to see on Verizon. Yeah, just a short put vertical here. We brought in 29 cents and currently it's worth a little more than what we sold for. So we're going to be showing down on the trade on this one. Okay. Are we concerned? Well, it's staying above our 46. It's pulled back since we got in. But it's not in a situation where we're really worried that it's violating the trend or reversing trend. It's not really giving us signs of that. So it's going to be a trade of patience sometimes, these credit spreads. So we're just going to let it work. There's no reason to get out or be worried about it. We're just going to let it work. Hopefully it'll kick in and move along and get up to that predetermined exit. So if you're wondering what that looks like, we come over here to the working orders and we come down and find Verizon. It's sitting right here. We said basically, hey, if we can get that, if that spread, the value of that spread shrinks down to about 8 cents, get us out of the trade. And I think on this one, we did a little bit more. I think we might have done 70% on this one instead of 50%. So yeah, we're going to go ahead and let it work. Andy says, you mean my real money didn't fill? Oh, that's interesting. Not sure about that. The symbol on the top left is getting cut off. Let's see here. If I go back to my charts, you're not seeing this Verizon ticker symbol when I'm on the chart. You should be able to see that. If my face was in the way, if the producers had my picture sitting there, they probably would pull it off. So you can take a look at it now. Okay. So Verizon, we're just going to be patient. We're going to let it work. And IREN, I was calling this Irene, but it's probably not really Irene. This is a trade that Barb got in at, looks like maybe on July 20th, so a couple of weeks ago. Entered into this trade, ran up, it's pulled back, it's run up. She's got it marked here that our 30 is the short leg. So we just want it to stay above there by options expiration, or as we're getting close to expiration. One nice thing about short verticals is that you don't have to be picture perfect in order for them to work out. If we just need to stay above this area, great. But it can go up a little bit, and that's how it starts to lock in our profits for us. But if it comes back, we still could be right on the trade, even though maybe right at that point we're not ready to get out. It still can work out for us, right? Because this stock can pull back clear to that 36. It could go below 36 for a little bit. It wouldn't necessarily be assigned immediately. And one thing you need to know about paper money is it doesn't assign early. If you have a short option that's in the money, it just doesn't replicate that functionality. Now, you need to understand that the live market could do that. It could assign early. And so if you get really deep in the money, sometimes people might consider getting out. In this case, you just kind of pulled back there for a little bit and then bounced right up out of there. So we're just going to let it work. Oh, Duke says it wasn't my picture. The chart zoomed in too much, so the left side, including the sidebar, is cut off. Now I have the sidebar collapsed right now. I do not have it open. I was just trying to make the screen, the chart be a little bit bigger. So yeah, I have that collapsed right now. All right. All right, our producer is going to do some adjusting on his end, is what he's letting me know. All right, thank you for letting us know. We want you to be able to see everything you want to see, for sure. All right. Now, I mentioned to you we're trying to, with any kind of trade, many times, I shouldn't say all the time, because sometimes we like it to be fairly neutral, but many times we're looking for a swing of momentum and looking to ride the swing of momentum. All right. Now, the first trade we're going to take a look at, we might do something here, or my plan is to do something here that maybe is not super traditional of what we might do in this class. Now, this is UiPath here, and I want to bring you up to, let's go out here a little bit. There we go. I want you to see a little bit longer range chart. Now, as we look at that, does any price pattern stand out to you? Do you see any price pattern that might be kind of a biggie right now? I'm seeing something. And what I'm seeing something is let me make this bigger. We need a Sharpie, not a pencil. All right. We are seeing what could be considered a cup and handle pattern. And many times it takes a little bit of time for this pattern as opposed to looking at some really short patterns. Perfect, you guys. Yeah, BJ says giant cup. It is a pretty good size cup. And so we see the stock getting up to a particular point. Then it usually has a pullback of some side, starts forming this side of the cup. And then it's really healthy if we can see it create a basing pattern, which is what's happened here April, May, and June. If you're long the stock, it can be frustrating when it's in that mode. However, it's come out of that mode. It is starting to form this right side of the cup. So we would expect it to get back up to where the cup started. So up here into this, say, $20-ish range. Maybe before it gets there, it forms what's called the handle. And so we see the stock kind of making its way up. It might do this before it gets to the top of the rim, or it might do it near the top of the rim. And what it does, it just kind of pulls back in a little consolidating pattern here. So that kind of looks like, you're holding the little handle of the cup. All right. What do we expect here? If it is consolidating in the handle, we'd look for maybe a breakout. And you might say, gee, that kind of looks like a flag pattern, right? A kind of a rise up, little consolidation that is really the handle here. So if you're not seeing the whole picture, you might just kind of be seeing the flag type position that's in there, or pattern. Okay. We're going to do this, and we're going to say we are interested in letting it run and pull and run and pull and maybe make the right side of the cup here. So we're looking more at an intermediate time frame here rather than a real short time frame. Foley says, can the handle be on the left side? Nope, we're not looking for a handle on the left side. We're always looking for it to form kind of this left side of the cup where it's having a pullback. Then looking for the base pattern, right? This is the steady place where your cup sits. It's nice and steady on the table or whatever before running up. So good question there, Foley. CB says, maybe we have a short-term double bottom here. You're right. That's exactly what we're seeing through here with this base is. Could even be maybe a triple or a quadruple bottom there. Yeah. And many times we'll see a pattern and we'll see additional patterns in it, like what CB's seeing here. The little double bottom, triple bottom, maybe quadruple bottom. And so, yes, it is all that handle is always on the right side. Okay. If we were maybe starting this pattern, let's do this. Let's clean this up and let me backtrack a little bit. Say maybe we're in a time frame that this is all that we were seeing. We might not necessarily know that it's looking to be or become a cup and handle pattern, would notice the descent, would notice the downtrend, that these moving averages are all moving down here. We might be seeing here at this period of time, maybe a little bit more like bear flags, okay, where we see stocks here, it drops down, and then maybe makes a little flag formation here. And then what does it do? It drops down again. So we have another flag pole. And then we see bear flag forming here. So it might look a little bit kind of like maybe some bear flags as it's forming. You could trade the downside, something like that. And then, like I said, as time goes on, we start to see a bigger pattern in there emerge, which is that cup and handle. Journal says, so when would you consider a good time for entry on a stock like this to take some profit? So you're saying when's a good entry? When's a good exit? Let's get into that. Although I'm going to pull it back here. Short term, what are we seeing that makes it a good entry here? Great question. What I'm seeing here is kind of more of a bull flag type scenario where we have kind of this straight move up, tiny pullback here, and then we have nice big move up here, kind of pulled back a little bit for a couple of days here, right? Maybe this would be the flag pattern here, and then breaking out of the long-term or the short-term flag pattern here. So we could look at a couple of different things here. One, we could say, well, we want to look for the height of this count of the flagpole. And actually on this one, we could start it here a little bit lower, or we could start it here at the breakout. I'm just going to keep the breakout. We're going to duplicate this drawing. We're going to put it at the breakout zone. We could put it there, which is a more aggressive target. We could put it down here in the flag consolidation area, like if it were to retrace. And then would have a much smaller target. We're gonna keep the bigger target on this one. So I'm going to take this to the breakout zone, and saying short term, maybe we could expect a move up to in the neighborhood of $16.15, something like that. However, I want us to keep the greater pattern in mind here, right? We're going to keep this greater pattern in mind. Maybe I need to move this back down here a little bit. Maybe we're going to try to get up here to 18, 19, 20. We're going to let it run up, pull back, run up, pull back. So we're going to buy a lot of time on an option here. So this is what we're going to do. Come over here to the trade tab. Here's path. And let's see how far out in time we can go. It has some nice weeklies. This is for a small price stock. This has a lot of trading activity, over 25 million here today. Sometimes stocks like this don't appear on our radar, at least on my radar, because I like stocks to be at least $10 when I'm starting to look at them. And this one just has some recent momentum where, yeah, it's gone behind or beyond that $10 in the last couple of weeks. Be going out to November. All right, that's about a little over 100 days. What, maybe about let's see, September, October, November. So maybe about 3 months out. You could go out to December if you wanted. I thought we might just start here with November. And what we're looking to do here is we could do stocks at $14.81, so it's almost at $15. We're going to buy this at the money call out in November. It doesn't have any intrinsic value yet, but what we can do, we can see there's decent open interest in this area. Pretty narrow, just 6 cents there. We like that, and we can do 2 contracts. Now, we're going to put an OCO order on this, okay? And this is what we could do. Let's see, how am I going to do this one? Let's do a first triggers OCO. First triggers, we're going to do a first triggers to OCO. We're going to put in 2 different targets. I'm going to get my scratch pad back here and do a little drawing. Our first target's going to be near that 16 area. Okay, so we're going to do target 1 that was at 16.15. And then, so I'm going to put T1. And then we're going to go for a second target. We're going to allow it to hold on a little bit longer. Let's see if maybe it can come up into this range. Maybe not look for all the way up the cup yet. Okay, but maybe this is saying about 1779. So let's go 1780 on this, and that's going to be our second target. Okay. And what about a stop loss? Initially here, I mean, we could trade the flag pattern and say if it breaks back down into the flag consolidation area, if you're trading the flag pattern, that's a point when we might consider getting off or getting out of the trade. Right now, that would be in the neighborhood of about, this is saying about 1298. So let's go a stop at 13. However, we're going to follow this up, okay? If it gets moseying around and it's up near that second target and maybe the momentum still looks good, maybe the relative strength line is still going up, maybe we're getting some big moves and some big candles, maybe we go in and change that. We could say, stay the course and just say, okay, first contract we get out at the first target rather than changing it. And then we could have our second contract there be at the higher target. So you could do that however you wanted. Okay. We probably will just take profits initially at 16.15 and see if we can get a little bit more out of the last leg. All right. So how would we set this up? We're going to have to create some opposite orders here. So opposite order. We actually need, I think we're going to use 3 of, oops, make that an opposite order, make that a sell. Okay. On the intermediate trade like this, we're not necessarily worried about the earnings date, or do we expect to be out of the trade by September 4th? So that is a little ways out there. We could be out of part of the trade. September 3rd, we've got what, about 3 weeks. If it maybe hits our first target, maybe is on the way to the second target and we're happy with the profits, we might say, let's not hold over earnings and risk that. Okay. Many times if you're trading a stock or an option here, like a stock in a trend type trade, then we say we were out January, December, something like that, even November, we might consider holding over the earnings. Okay, but we don't have to. Especially if you don't want to jeopardize a decent profit in it, then you'd say, let's make sure we're out before then. And you could build that into your exits as well. We're not going to do it here. All right, so our first target is going to be based on the price of the stock. So we're going to take this down to 1 contract here, and we're going to make it based on hitting target number 1 or hitting the down area, this 13 area. We might not even need this second one. We'll go ahead. Let's configure it here. All right. So first up, we're going to say, all right, if the path gets to our greater than or equal to $16.15, get us out of the trade. Or if it goes down and hits our stop loss at $13, get us out of the trade. Now, the plan is also to be active with that stop loss. Right now, we're setting it at $13. But when maybe it moves for a couple of days, it moves pretty decent, we maybe take that up to the break-even point, right? That we're like, okay, if it falls apart on us, at least we're just breaking even or make it a little bit on it, okay? So we'll be active with that. So that's what the plan is for the first contract, okay, is one of those 2 scenarios. Then, let me delete this guy. Then we're going to have this second order here. We're also going to make it good for the other contract. Okay, and on this other contract, we'll put in the same loss. And I forgot to change these to market orders. These need to be market orders. They need to be good till canceled. All right. We don't know what the price of the stock or the option would be at that point, right? We're just basing it on the price of the stock. So then this is contract number 2 and target number 2. So if this gets to greater than or equal to, in this case, we're going to go 1780. 1780. Come on. There we go. Or down to our stop loss, which again, we're going to actively monitor. It's going to be $13. And again, we'll adjust that. Make sure your arrows are going the right way, that it's greater than or equal to 1780, less than or equal to $13. Okay, we're going to hit save. And we're going to be active with this one. Okay, let's see. See if Barb has a bucket for just some, oh, what isn't it like? Should be, I've got to change my OCO back. I chose 2 OCO, and we're just going to do it with a first triggers OCO. So one or the other here. All right, keeping me out of trouble here. We appreciate system working like that. And let's try to get it at the midpoint price. If we're not successful getting it at the midpoint price, we'll come back to it. And let's see what Barb has here. We're going to put this in the long calls. That's the long puts. Put it in the long calls. There we go. All right. Any other questions with that one? How do you determine a break-even point? Vicki says. What we'll do is we see how much did we, let's see how much we got filled for on that. We got filled at 231, so a little bit nicer. Okay. 2 contracts, that cost us 462. So we need the price of the options to move beyond that 462 amount. You could go in, we don't have time to do this right now. You could go in if you wanted and play with the Theo price and see, hey, to get to this point, how much time might it take? Let's put in an estimate, see what the Theo price is. You could do some things like that, but just knowing, hey, I need the stock to move so that it covers the price of our options here. Yeah. And we would position size this to the max loss, which we did. We said we don't want to spend more than $500. We're not going to, if everything in the world goes wrong on this trade, we don't want to lose, we don't want to lose the whole thing, but we're going to position size to it. Okay. I think we covered most of the question there. RG has a different idea, maybe doing a covered call on that one. All right. Very good. Let's move on to our next potential trade here. Let's take a look at and see if it's still looking good for us. This is kind of an interesting one. Zoom. Let's back out, kind of see what the chart looks like. Looks like the relative strength is up. That lets us know momentum is shifting this direction. It's interesting. It's actually not that high. The highest it's been on the relatives, well, I guess it's doing good, right? Because we're comparing it to the SPX, so it's trading more, it's trading better than percentage-wise than the SPX is, okay? The SPX is going up, but it's doing better than the SPX as we look at that relative strength. All right, now, do you see any price patterns here? I'm going to kind of zoom in a little bit shorter term, okay? Some of you might say, well, that looks like a smaller cup and handle pattern, and it very well could be, all right? And if we were looking maybe at, let's zoom in here, maybe something even a little shorter term than that, we might say, oh, well, maybe it had a flag, pull, consolidating flag here, and then breaking out of the flag consolidation. That's what I'd kind of see there. I'm going to start the flag pull here on the straight vertical move up. If you wanted to, you could maybe start it down here with one of these candles. These looked a little bit more sideways to me, which is why I started it on that tall candle. Because that flagpole, we want it to be just kind of straight and rigid all the way up. All right, we're going to duplicate the drawing. We're going to put it out here. Again, more conservative would be at the bottom of the flag consolidation. More aggressive is going to be where we see it breaking out here today. And that could give us a target in the neighborhood of about 112.5. Okay, that's where theoretically a technician would say, hey, we're looking for it to go there. Does it mean it will? No, doesn't mean it will. Now we've got earnings here on, looks like August 25th. So we're sitting here today at the 6th, so we've got about 3 weeks in it, okay? Hopefully we would be out of here by then. All right, on Zoom, it's more of an expensive stock. So are we gonna be able to buy the options outright? Probably not, right? We're gonna be thinking up, we probably need to do a spread of some sort. On this one, I was looking because that momentum is swinging up. Maybe it's forming that, maybe it'll form a new flag pole, or maybe it'll start going up the side, forming that right side of the cup. So on this, we were looking to do here, I went out to the September 18 options, giving it some time. And let's see if this still seems to look good here. I was looking to do the 100, 105, stocks at 104.18. Now this, let's see how interesting this is. That is very interesting. All right, I'm gonna lock this in on a $5 wide spread. We would be risking $2.50, right? 5 minus 250 gives us our max theoretical gain, which is 250. So we're risking 250 to make 250. We're looking for 100% return here by options expiration or before they announce earnings, right? Does the stock need to move a whole lot for that? It doesn't. It's at 104.11. We're saying, hey, little stock, you've got several days to move to 105, which is about right where my mouse is. And that's even going a little further. Earlier today, it got up to 105.53. So we're not asking the stock to do a whole lot. Although we would love for it to continue to run up there, get us, a decent amount. See if we can ride that momentum to bring some decent amount out of here. Now, we're going to risk 250. We can do max 2 contracts here. We are going to do a first trigger sequential. We're going to say create opposite order. And we could go for a percentage of this, or we could say, let's just go to the top of the flagpole and see what we get out of it. Okay, so that turned out to be 112.58. What if we just go to 112 as our target? Okay, and just write it, see what we get out of it. We're not going to say we've got to get the whole thing. So in this case, we're going to change that again to a market order, make it good till canceled, and we're going to put in the price of the stock here as well. Now, again, you don't have to do it this way. We're just choosing to do it this way. We want it to get greater than or equal to 112. And if you wanted to go, 111.90 or something a little short of that, you very well could. Let's go 112 here. And it'll be a market order. We don't know what the price will be at that point. And we're going to do just both contracts the same on this one. Could you break it up like we did the first trade? You could, right? You could put in a couple of different targets. Not a problem. Let's go ahead on this and let's put it to Barb's grouping of long call verticals. All right, off it goes. Hopefully we get filled around that 250. That would be nice. August Chinchilla said, should that be an opposite order? It should be an opposite order. Thank you. Let's cancel that. All right, here's our initial order. I'm going to say duplicate order. First trigger sequential. I thank you for picking up on that it didn't actually do the opposite order. All right, so there's that initial fill. We'll change this to market, good till cancel. And greater than or equal to 112. And I'm going to say, okay, here. We're going to hit save. And let's send this in. And then we're going to get rid of the singleton sitting here. So this is our one cancels other. That actually did not. I usually look to see if there's a little connector thing in here. I wonder if I went too fast and didn't do it right. Eating, working. Maybe I forgot to do that. I'll go back and fix it. Our time's almost up and I want to do another one. Okay. I'm just seeing if there's any clues out here that could help me, because this little bracket here means this or that. And this should be basically one or the other, right? We really don't want 4 contracts, so I am going to cancel one of those orders. See if that'll go. Huh. Maybe I'm having a little hang up here. Okay. Let's cancel, replace this one. This is the one I probably canceled the wrong one that we want the market order based on the price of the stock. All right. Get back to our target of 112. This was the easy order. It wasn't even the complicated order. All right, let's hit save. Make sure it says, oh, I know what I did wrong. I'll just redo that order. I apologize, you guys. Let's look at one quick thing here. Coca-Cola. What's been going on with it? It's just kind of been a little bit of a steady Eddie. Earnings looked pretty good. They gapped up. Usually the bottom of the gap acts as support. And really, it looks like maybe this old resistance is acting as support. It came down, kind of tested it, bounced up. And then today it looks like it's bouncing off that 10 exponential moving average. Let's do an easy trade on this one. All right. I was thinking to do a short put vertical, but using August 28. Many times in verticals, you want to use 20 to 40, maybe 50 days sometimes. And some of these stocks that trade a huge volume, the weeklies can be fairly liquid here. So this is kind of the short end of that range. And we're looking to here to just go 86.85. We're going to say sell vertical. Bring in 33 cents. Is that a pretty decent return for 21 days? It is. If you take 33 and divide it by 67, you're going to get 30 something. Okay, we'll do first trigger sequential. We're popping this one in here pretty quick, you guys. Sorry about that. We'll create the opposite order. And let's say if we get a chunk of it, we want to get out. Okay, grab my little calculator here. We get a chunk of 33. I'm going to say here if we get 70%, which means 30% will be left. Let's go buy it back at 9 cents. All right, we'll say happy. We got 70% of it. Let's get out of Dodge. Take the money and run. Not sure why that's being a little weird. Okay, there we go. 9 cents, buy it back. We'll put this in the short verticals grouping. All right, to summarize here, short put verticals. To summarize, we're letting some of our options work. 2 that we did on Monday hit their targets, boom, boom. We love to see that. Makes us happy. And then some we're going to be a little bit patient with. We're going to be patient with Verizon and IREN. Let them just work away. And then we just put on a couple of new trades. All right, we put on a long call vertical on Zoom that has duplicate targets. And then we just put on Coca-Cola as a short put vertical. And actually, it wasn't Zoom that we did the 2 targets path. We did the cup and handle pattern with 2 different targets on that. All right. Now, I hope you're following us on X. I'm Connie Hill CS. James is James Boyd CS. You want to take advantage of that. Big thing also to find our content. If you're a subscriber to our YouTube channel, just makes it easy to find our stuff, right? Here's our smaller account. Next up is going to be Cameron May Advanced Charting Techniques, and followed by Brent Moore with some advanced option strategies. So you can just see what the lineup is, and you can go into our playlist, go back and look at old classes. Makes it really handy for you. Okay, so click that blue logo in the bottom right-hand corner. All right, James, thanks for your help out here today. Thank you to each and every one of you for being here, your questions, your comments. If you're looking to get better in any of these strategies, these could be good example trades for you to do in your own paper money account. And then come back on Monday. Barb should be here, I understand. And she'll have a chance to follow up on any of those trades. All right, you guys have a great rest of your day. We'll see you at the top of the hour with advanced charting strategies. Bye-bye.